We can wrap up trading plan for April 10th, 2010. And our website is blog.accendotrader.com, where we put together effective video technical analysis trading plans on a daily basis. We believe a trading plan keeps us focused and disciplined so that we know what's coming down the market that will affect our open trades and as we scan for new trades. But more importantly, it cuts down on our research time so that we can spend time with family. So the week that was, well, really, except for the NASDAQ, we had what could be perceived as a blah week. But as usual, the text doesn't tell the whole story. We have to look at the charts. Once again, our markets continue to make gains, and we did on yesterday at the close. We hit 11,000 on the Dow Jones. We didn't close there. We closed very close to it, but we did cross over intraday into the psychological boost of the Dow 11,000. So maybe now they'll start down 12,000. We had 7 out of our 10 major S&P sectors ending up higher, led by financials. So that's certainly good. And when financials are moving, the rest of the market moves. And the thing that's interesting, because remember, the NASDAQ's really been a big mover, our Apples and our Google. But our Goldman Sachs and JP Morgan, Bank of America, these stocks are only up about 2%. You can see the NASDAQ's up 8%. So if the financials now start moving to catch up, then that is certainly a potential good news for the S&P moving higher if now people come to look in the financial sector to try to maximize this move. The market did start off this week on a positive note. We were reacting to last Friday. Remember, the market was closed. Although the market was closed, the non-farm payroll was announced, and there was some positive reaction to that. We had some positive job growth. A lot of talk, is it just census jobs? But we did have positive job growth. And so the market opened up positive on Monday. We did have a down day. We had weaker than expected consumer credit. What's interesting about that is that you can see it wasn't even close. We were expecting a negative 0.7 billion, and it came in at negative 11.5 billion. So it wasn't even close. Also, throughout the whole week, we had this fluctuation about what's going on with Greece's financial situation. And there were agreements, there weren't agreements, there were agreements, there wasn't agreements. Even yesterday, on a great mood we had yesterday, but we were going up, and then out of the blue, boom, down 40 points, down 30 points, because someone, Fitch, reported he downgraded Greece's debt to BBB, something like that. But of course, the EU came out and said they don't see any problems with that, Greece's financial situation, and so the market ended up rallying right off of that news. Again, to that Dow 11,000. There wasn't a lot of corporate news that had any effect on the market this week. So next week, you can see what we have. Not a lot on the economic calendar that's going to move the market, although who expected consumer credit to have that impact? That was our down day. But what do we have next week? We have the kickoff of the next quarter earnings season. We have our Alcoa after the market closed on Monday. And then look at this week. We've got Google going to move the market. JP Morgan can move the market. Bank of America can move the market. Intel can move the market. So we definitely have some catalysts that we can finally see some volume possibly come back into the market. All right, so as we start off by looking at the charts, we can see what have we been talking about. We've been talking about the low volume in March, continuing into April. We've been talking about when we did see some volume, they matched up with our red days, big volume, down day, higher than normal volume, down day, same thing here, same thing here, same thing here. But again, what is the old adage of the stock market? The trend is your friend. As long as we continue to make higher highs, even as we pulled off of the Bollinger Bands and the bands are tightening, we continue to make higher highs. The bands could spread back open again from here. As long as the market continues to do that, you have to continue to make long trades. Yes, I'm cautious about it. I may have a little tighter stop. And as we try to find resistance, I had to go all the way back to 2008 in this August, July, September timeframe to find some action at this 11,000 range. And you can see, again, at this 11,000 range, it is a psychological boost. We bounced here. We got another bounce here, and once we crashed through that 11,000 range, that was the beginning of the real big push down. So we're going to have to, as usual, use a monthly chart to identify support and resistance. Before we get there, let's go ahead and pull up the NASDAQ and the S&P 500. Look at this beautiful NASDAQ chart. It's just beautiful. 10 moving average holding up as support, and we haven't even made it back to the 20. I mean, and that's what we thought we were going to get right in here, but we didn't get it. So again, let's use this 10 moving average as our support. We're off that moving average, so we want to see the NASDAQ come back to it. So that is our safe entry, a pullback to the 10. But again, the trend is our friend, and we got to continue to play to the upside until the charts tell us otherwise. The S&P 500, similar story, never made it back to the 20 moving average. 10 moving average is our safe entry point. Each time we've hit the 10 moving average, we've bounced. So certainly that is going to be what we're going to use. So that is our safe entry. If you're looking to go long on the S&P 500, pull back to the 10. Of course, you want to let it pull back and go back up. You don't want to crash through down to the 20 moving average. But again, the trend is our friend. So let's go ahead to the monthly chart and try to pull up our support and resistance levels. On the monthly chart, we can see the lovely 50 moving average right here and how the S&P is continuing to stay over that. Great psychological boost. We can see some of our swing lows, swing high action here at the 1200 range. So that is still probably going to be our next target where we're at, 1200. Another 30 points or so. And our support is still going to be this 50 moving average at 1150. So we're looking to move up to about 1230 on the S&P 500. On the NASDAQ, we clearly get an image of how the NASDAQ has led us higher. We've taken the whole move down out. We've talked about this 2500 really as our next target for the NASDAQ. Below us, we have some action here at this 2350 level. But 2500 is our target. And you can see we are off the moving average. We probably do need a little pullback. We've been saying we're waiting for a pullback. But again, the news will be our catalyst. Dow Jones. The Dow Jones also has a psychological boost of being above the 50 moving average. You can see the Dow Jones is at resistance, messing up with the 2005, 2006 swing highs, swing lows. If we stay above here and move higher, it looks like our next area is going to be around 11,700 is our target. Well, you can, let's just say we got 11,650, 11,700. So in that range is our target, and our support will continue to be the 50 moving average. We're using the book Trade Your Way to Financial Freedom by Dr. Van Tharp, and we're still on Chapter 1, The Legend of the Holy Grail. And we're continuing on, and this again is a great follow-up. If you watch our videos, you know we spent a long time on Trading His Own by Mark Douglas, and now we're using Trade Your Way to Financial Freedom. But he's talking about here in Chapter 1 that the true Holy Grail trading is understanding that psychology is the majority of what makes a trader successful. And he says he breaks it down into 3 areas: psychology, money management, which is your position sizing, your targets, your stops, and the system development. Your system development is your signals, what your indicators. But he says that psychology is 60%, and that position sizing is 30%, and that the most least important thing is the actual signal. And I always tell people, trading's not hard; it's controlling yourself that's hard. And he gives an example of Ed Sekoda. And he was teaching a course, and he said that of the 10 weeks course, he spent 8 weeks trying to get people to believe in the system and to accept whether or not his system or any system gives them losses or not. Some people get a loss and they move right on. So that, again, psychology of trading, your belief, your ability to overcome losses, your ability to believe in your system, your ability to believe in yourself is the most important thing you can harness, that you can develop to be a successful trader. Well, you guys know we got a great futures trading room. Now they have a new discount, $100 discount off their price, and before they charge you that, you got a 5-day trial. You can see we got $600 positive for the whole week. That certainly is great. If you're going to trade futures, We got a great futures broker, and in that example, he uses 6 contracts. So we got a great E-mini broker that has futures as low as $300 intraday margin, 23 contracts, a great charting platform, and we do have a futures trading plan to help jumpstart your move into trading. You can go to our podcast. That's back and running. We've got great YouTube videos for you to see. Always, we welcome donations. Trade at your own risk. You can't lose all your money. And I will see you guys next time. Don't forget to follow us on Twitter, twitter.com/Accendo Traders, to get all of our updates on our blog posts and our videos. Check us out.